In this video, we're going to try and understand how geopolitics affects stock market. Oil prices on Monday jumped to an 8-year high after the United States gave a statement saying that Russia will invade Ukraine immediately. Just imagine, a mere statement from the United States president has triggered the prices of crude oil in international markets. The price of Brent crude was at $90.57 a barrel on 11th February. On February 14th, it went up to $96.48 and again it dropped to $92.43 on 15th February. Do you see the fluctuation? The price went up after 11th February because United States President Joe Biden had said Russia could potentially invade Ukraine anytime soon. And then he also said if Russia invaded Ukraine, then the US and Europe will impose sanctions on Russia. I believe he said this on February 12th or late February 11th evening. And immediately the price of Brent crude went up. The same thing happened with WTI crude. It went up after February 11th when Joe Biden gave that statement. By the way, there are different grades of crude oil depending on different locations in the world. For example, oil fields in the North Sea produce a grade called Brent crude. The United States uses West Texas Intermediate, which is WTI grade of crude oil. Similarly, OPEC countries' grade of crude oil is called the OPEC basket. So anyhow, after Joe Biden's statement, the price of Brent crude and WTI went up after February 11th. So this is what I was trying to say, that the stock market, capital market and commodity market are not at all immune to such geopolitical events. Just a hype by the United States president that Russia could potentially invade has caused an increase in oil prices. And then on February 15th, Russian President Vladimir Putin said he does not want war in Europe. And after his statement, you will notice that the price of WTI crude as well as Brent crude has come down. So you see the difference, right? How big leaders, whenever they make any statement, what impact it has on the economy. In this case, you can clearly see that whenever the United States president makes any comment or statement, the oil prices shot up. If oil prices shoot up, then it will raise input costs for most businesses and force consumers to spend more. Likewise, this Ukraine conflict has also caused gold prices to go up. Gold prices are trading near 3 months high, that is $1,859 per ounce. Again, if you see, geopolitical tension is the reason behind the increase of gold rates. Just now we saw that US inflation is at 7.5%. I've also made a video on it. That means the United States Federal Reserve will increase the interest rates anytime soon to curb inflation. If interest rates are high, then naturally bank loans will be expensive and the value of your currency will decrease. So what investors usually do is they buy the precious yellow metal which is called gold. So because of this Ukraine crisis, many investors have rushed to a safe haven asset instead of dollar currency. So this kind of shift in the investor's mood is quite natural and common. So this is what makes the predictability of the market almost impossible. That is why there is a famous disclaimer which says, investments are subject to market risks. Read all scheme related documents carefully. Anyhow, the main point of this video was to tell you how geopolitical conflict influences the stock market. I hope you found this video informative. Thank you for watching it.